Hi, I'm Candice.
And I'm Malessa.
Welcome back to The Build Up, where we discuss secrets of building wealth through real estate.
Today, we're going to be discussing the ever-present headline in real estate news, housing affordability crisis, and we will be discussing Opportunity Zone with today's guest, Alex Bhathal. Well, back to the grind, but it was a really nice weekend we had upstate.
Yes, we stayed at the Wildflower Resort, which is a new auberge that opened about a year ago. It's an hour and a half or so from the city.
Not bad at all. Very quick drive and really a completely different landscape.
Yeah, it was very, not like the concrete jungle we're used to, but
I did have a nice jungle immersion tour, though. It was really nice.
I think they called the forest there, not the jungle.
Oh, yeah, that's right.
But yeah, it was super nice to be in nature, for us to have some time to just relax together. But we're back, though. We're back in New York City.
Back to reality. And a topic that we've been seeing in the headline recently is the housing affordability crisis.
Mm-hmm. Yeah, it's been a major issue, not only here in New York City, but also across the whole country.
So we were recently reading this Goldman Sachs study that states that actually prices are going to increase an additional 1.8%, which is really surprising because everyone thought with the high interest rate that prices are actually going to go down, but it's really held steady, and now we're seeing this increase, which is really putting a lot of pressure on buyers because they're finding it really hard to afford it, right? High interest rates and also inflation.
Big problem is that there's no inventory. The number of new listings hitting the market is becoming less and less. At the end of July of this year, the number of new listings was down 9% from where they were a year ago, but get this, they were down 46% from where it was pre-pandemic. So we can clearly see that there's very little inventory, and a big part of that is that people who did buy before the pandemic locked in great rates, right? And so unless they have to sell for some reason, they're not going to sell, because where are they going to go? Maybe they're sub 3% or 3%. They don't want to go now and buy something for 7%. They're hearing that prices are high, plus high mortgage rates. So it's not motivating anyone to want to sell right now.
I mean, I completely agree. But on the bright side, these strategists are predicting that, rates are going to be coming down about 100 basis points through next year, 24. So that's a little bright side to things, right?
One would think, but at the same time, the study from Goldman was also saying that when rates come down, people will then be more eager to buy, which will then absorb whatever inventory we do have. So it could actually have the opposite effect on affordability, which is just kind of creating this perfect storm.
Right. So I would suggest that people buy right now, even with the high interest rate, buy now, because prices will go up. Once interest rates come down, everyone's going to flock to the market. And so obviously everyone's going to raise prices. So I would suggest buy now and then refinance once, interest rates come down. So that way you're not going to be overpaying.
Right. You can't do anything once you've overpaid for a property. You're set, and that's, what you purchased it for. But if you buy at a good price, but with, let's say, a little bit of a higher rate, you can always refinance, to your point, because that's not permanent. So that's, I would agree completely with that. And the other issue that we're seeing also across the country, but speaking to New York City where we are here, is that, people aren't buying, right? They're on the sidelines right now. So they need a place to live, though. So that's flooding the rental market and putting a ton of pressure on rental prices there as well. So the affordable crisis is not just for buyers, it's also for renters. We saw that the median rent in Manhattan just reached its highest level ever at $5,000 a month, which is crazy.
That's insane. And with the most recent termination of the 421A tax abatement here in the city, you were seeing that firsthand. We're sort of in the middle of it. Like you mentioned, rental prices are so high, and that's because of that. Like no builder is finding, that incentive to want to build because margins are so tight, interest rates are so high. How are they going to afford to build and also make a profit?
Yeah, developers warned, and we're now living through their warnings, that if the 421A tax abatement expired, it would really prevent them from building new inventory. And that would only fuel this crisis even further, really putting pressure on the lack of supply that we have. There's only a very limited pipeline currently, and it's going to be absorbed within the next 2 years. We really have a problem here.
Exactly. And it's frustrating because we all had this information. As a matter of fact, according to a study commissioned by the Real Estate Board of of New York, it states that New York needs over 500,000 new units to really fill this deficit of housing until the year of 2030.
Wow. I mean, that's no small amount of apartments. And what you really need to fill that gap is large scale development, which right now it's not making sense. The numbers don't make sense because people forget that the high interest rates don't only affect the end buyer, they affect the developer. It's on they have to pay very high interest rates on their acquisition of the land or of the site, and also on the construction loan. So now their cost of building has gone way up, and without the 421A tax abatement, it can't justify the numbers to build rental developments, specifically affordable housing, because with affordable housing, naturally, your return is going to be less than if it was free market, right? Because your rents will be less. So that tax savings really helped them bridge a gap that was needed to create new rental development. And now that program is done. And so they're finding it super difficult to build any project of scale.
Exactly. And we have been seeing a lot of, not a lot, but the actual buildings that have filed for permits are smaller projects, right? And according to the Real Deal, they're thinking that it's because they're looking into different incentive programs, right? They're looking for the city to sort of help them finance their projects, or it could even be, a developer who had this land, and so they don't have to pay acquisition costs. And because of that, now they have more margins to play with.
Yeah, and so that could be one positive is some of these smaller buildings getting through. But a lot of the smaller projects that would be otherwise rental buildings are now being converted to condos because rental buildings have very high property tax, much higher than if you convert to a condo, which has permanent condo tax abatement. So again, we're not really seeing a ton of new rental inventory being built.
Right. And a lot of these renters who are now being forced to pay really high rents, they should now start to consider, putting a down payment for a purchase. But again, it goes back to that affordability complex, right? Like, especially with high inflation, how are they going to afford a down payment, right? And so they have to come up with a purchase plan.
For sure. The planning is super important because going back to that Goldman study we were talking about before, they're very concerned, and as are we, about the behavior of home buyers right now as they're trying to adapt to a new high interest rate environment. They're very unsustainable behavior where right now we're seeing that the debt to income ratio is 38%, which is a huge deviation from what the average has been since the financial crisis. So what we're seeing is people are really stretching their limits to afford to buy because they're feeling that they have no options. And so they're becoming way more leveraged. And then we also have inflation. We have a lot of other factors at play. So this is really becoming kind of like the perfect storm.
Exactly. But what is the real solution now? Like, what are we doing to really bridge this gap?
Well, yeah, like always, I feel like the government waits until it's super, the crisis is fully exploded and now what do we do, right? Like you said, they knew a lot of this information before. The pipeline of new inventory is something that anyone can track. It's not like this came by surprise like the pandemic. But here in New York City, we're seeing Mayor Adams is trying to come up with plans. One was to convert office space, mostly in lower Manhattan, into residential. We actually spoke about that on a previous episode.
Right, because it's really expensive to convert. And that plan only accounted for about 20K apartments. So what about the other, 500,000 units that's needed?
Exactly. 20,000 is a drop in the bucket when you're looking to achieve 500,000 new units. So that plan, hopefully it goes forward because it's needed. But now he's becoming more ambitious and he's discussing a plan to rezone parts of Manhattan, primarily in Midtown on the west side, that are zoned manufacturing and industrial right now, to residential, which will hopefully create a lot more opportunity for residential use.
I mean, I appreciate that there's some sort of plan and acknowledgement that this is a crisis, but these are just plans at this stage, right? It's going to be a whole process. They need to get city council approval, and this is going to run into all the way next year, probably the year next. So I think we need to come up with some solution in the interim because it's really impossible, right, to be renting at $5,000. And then also there's no option to really purchase. So I do think we do have a problem and there needs to be some sort of a short-term plan.
Yeah, I mean, right now we're just going to have to see what the government can come up with to really incentivize builders to keep building, especially rental buildings. And one program that has kind of emerged over the past few years is opportunity zone investing. It's very different from 421A tax abatement, but it does have its own unique tax advantages. So in that way, it's somewhat similar. And actually, our guest today that we're going to be speaking with is an expert at opportunity zone investing. And so we're really excited to hear his insights because maybe it'll open up some opportunities to create new housing.
No pun intended.
Yeah, exactly.
No, I do agree. I'm glad that there's some sort of alternatives, but again, we're not the expert on this specific topic, and that's why we have Alex here today. And we've heard a lot about opportunity zones, so it'd be great to hear his perspective and how he's really utilized it.
Absolutely.
All right. So we are very excited for today's guest, Alex Bhathal. Alex is the founder of Raj Capital, and for our basketball fans out there, he is the co-owner of the Sacramento Kings, as well as their home court stadium, Golden One Center. He is an extremely accomplished individual, and so there's much that we could discuss when it comes to Alex's background, but the main reason you're here today is because you're a leader and early adopter in opportunity zone investing, which we're going to be diving into more. Alex, welcome to the Build Up.
Great. Thanks so much, Candice and Melissa. Thanks for having me today.
Thank you so much for being here. As Candice mentioned, your background is extremely diverse, especially with real estate. But I think we can take it back a little bit from the beginning. Can you talk to us about your background and your family, your upbringing, and how did that impact who you are today as a business person?
Sure. Happy to share about our family. I come from a family that's been in business for a few generations, headquartered out here in Newport Beach, California. My grandparents on my mother's side came out from the Midwest in the 1940s and got into the restaurant business, which allowed them to get into the real estate business. So we have some properties in the family that date back to the 1940s. In 1960, my father immigrated to the United States from India. So he came here for college and finished his university studies and master's degree. And along with my mom, after they met and got married, they started a company in the apparel industry that's actually still around today, doing swimwear and beachwear, which is a very California company, headquartered down here in Newport or in Orange County as well. And from the success of that business, it allowed the family to get deeper into the real estate markets by acquiring properties and developing properties, mostly in the Southwest, that gradually grew in size and scope through the decades. I was fortunate to be able to work alongside my parents and with my sister as well after I finished business school, focusing first in the apparel industry. And we did a lot of great things. We grew the company, took it digital, took it global, sold it to private equity, and then really spent most of my time since then, after exiting the operations of that business, in the real estate markets. And you mentioned we've done some good work through our ownership position in the Sacramento Kings, where there's a lot of redevelopment done in the city of Sacramento. And that was a very successful urban revitalization that was really impactful to me personally, as well as to the community and to the ownership group. And it inspired me to investigate and get involved in the opportunity zone space. That's a new policy, a relatively new policy that was enacted back in the end of 2017. And what it allows for is tax incentives for certain investors who allocate and make investments to historically lower income communities. And given the experience that we've had in real estate and through the Kings ownership group, it was a very natural transition to get involved in the opportunity zone space early and become a very successful vertical for us. We've invested into 15 projects over the last 5 years, helping to capitalize $1.6 billion of new developments across the country in historically low-income areas.
Yeah, that's so impressive. I love that your parents had the foresight of investing in real estate, as part of their early portfolio and wealth building. Malessa is an immigrant and my parents are immigrants. And so that wasn't necessarily something that our parents did. They didn't necessarily have the resources or knowledge to invest into real estate beyond maybe a primary home. So that's really great that, growing up, you saw your parents invest in real estate, invest in businesses. And, that's not always the immigrant story. So that's really great to see that. So what was your first introduction to real estate, though? You mentioned how your parents had some exposure through their restaurants and other businesses. But when you kind of took over, what was one of the first deals that you did?
Interesting. So I do remember growing up, spending the Saturdays with my dad, driving around to see the property. So it was kind of where you draw the line is a little tough because it's always been in the blood, so to speak. But I do remember before I went to business school, so after undergrad, then I worked with my dad. I was just fresh out of school. I didn't really know what the heck I was doing, but we built a shopping center in Las Vegas. So that was the first live example of getting involved in a development in a growing market, and thankfully that was successful. Nothing to do with my skill set, but it was a successful project, and I guess left a little bit of a taste a taste for wanting more in real estate and real estate development.
Was that just an excuse to go to Las Vegas?
I was going to say.
Yeah, at 22, I was probably more interested in the trips to Vegas.
You're like, hey, Dad, this would be great for us. Look at this deal I found in Las Vegas. That's awesome. And you mentioned that you run a business with your sister. I have a sister. Malessa has a brother. So, we know what it's like, having a sibling, but neither of us work with our sibling. And so clearly it's worked really well for you. I know you've been working together for a long time, but nonetheless, it's still working with family. So there must be some challenges there. Like, talk to us about what that partnership is like.
Yeah, it's interesting. I've been business partners with my sister for over 20 years now. So it's kind of second nature to me, and we have very blessed to have a great working relationship with my sister across the businesses and across the multiple fields that we're involved in. And I think what that comes down to is trust and also a deference to each other's strengths. So when we will have plenty of times when we disagree on a particular business issue. But I know when it's in an area of her expertise, I defer to her final judgment. And similarly in reverse, when it's an area of my expertise, she'll make her point, but defer to my final decision. And we work really well that way.
That sounds a lot like Candice and I's dynamic. I think trust is huge, right? I think that's the foundation of any successful partnership. So totally relate to you on that one. Going back to Opportunity Zone, though, you mentioned that you have been in 15 deals and over $1.6 billion. But this program is still relatively new, right? And it's been compared to programs such as 1031, but it's also very different. Can you walk us through the fundamentals of this investment strategy?
Sure. So it's what we like to say is the Opportunity Zone tax benefits. They're not going to make a bad deal good, but they could make a really good real estate deal great by incorporating these tax advantages. What it allows for is investors who have capital gains to defer the tax that they would otherwise pay to the IRS if they make a qualifying investment in a real estate project or fund. And what that deferral does is it kicks out the time upon which they have to pay their capital gains tax until tax year 2026, so it would be payable in 2027. Which is nice to get a deferral on taxes because then you can make other planning and utilize the cash in the meantime. But the biggest benefit of the Opportunity Zone tax incentive is for investors who make a qualifying investment and hold it for 10 years and see that project increase in value. When if an investor were to sell after 10 years, then there is a step up to market value, which means there's no capital gain tax that's owed on that appreciation, as well as an avoidance of depreciation recapture. So it's a really powerful tax tool for certain investors in certain situations where, like I mentioned, it can take what you would otherwise invest in being a good real estate deal and really get these outsized enhanced returns or the potential for because the federal government is incentivizing capital to come into these historically underprivileged communities.
Yes, and I remember when the program came out, there was a lot of ambiguity around how to use it properly, and so I know they've since clarified most of it, I think, but can you explain to us a little bit about your learning curve as you tried to navigate the ambiguity of this new program?
Sure, yeah, it actually was. It took some time for those regulations to get issued and clarified how this rollout was going to go. It was actually just I think it was a couple pages in a multi-thousand page bill that was passed by Congress and signed by the president at the time. But those short couple of pages had to be translated into an executable and investable program. So it did take some time. From an investor perspective, it's now pretty clear cut and simple. Investors can invest into a fund, and there's a one-page sheet that goes along with their tax returns that outlines the investment that they made. And then it's up to the fund managers and the developers to execute in a qualifying way. All that's cleared now. It's basically geared towards ground up development or significant rehabilitations of real estate projects. A lot of the money has gone into the multifamily space, as well as some industrial projects. And the tool itself can be used for anything. It can be used for hotels or retail shops, or even operating businesses. And some people have utilized the tool for operating businesses, but most of the dollars, because of some of the complexity that you mentioned, have been steered towards building apartments in areas that need housing and could use some additional economic activity, that's a more clear-cut example of how the tool is used.
Yeah, that's really helpful. And like you said, thankfully, there's been a lot more clarity now about it, making it something that more people are now getting into the space. But you were an early adopter. So despite all the ambiguity, what about Opportunity Zone made you want to be so bullish about this type of strategy?
Well, I think it's a great tool that combines good public policy with private capital. So that's something that I just personally always had an interest in from a policy perspective, as well as from an economic perspective. So to me, especially having seen the successful development up in Sacramento through the Kings, it was an opportunity to take some of those experiences and lessons learned and apply it to other up and coming markets across the country, utilizing this new tool.
No, that's great. And that was actually a perfect segue to kind of our follow-up, which is, when you're looking at these deals, is there specific markets or types of properties that you're looking at when it comes to Opportunity Zone investing? Like, what is your thought process for this strategy?
Yeah, it's evolved through the years. It was back when this was a new space. It was a little bit of a Wild West. There were all sorts of personalities getting into the business, and a very broad range of developers and a broad range of fund managers and a broad range of deals getting done. We've really fine-tuned our approach. I mentioned our asset types that we like the best, which are multifamily and industrial, but also within the markets. To your point, we spent a lot of time on market research, identifying, especially in this post-COVID world, where people are moving to, where the jobs are going. And keep in mind, Opportunity Zone investors are by their nature of the 10-year hold long-term investors. We're not people who come in and fix and flip or do things on a short-term basis. So it is really important for us to study where the puck is going, so to speak, to use the hockey phrase, and understand what cities, what submarkets are going to look different and continue on a route of progress over the next decade. So we've invested in cities like Indianapolis, Charleston, South Carolina, Huntsville, Alabama, Albuquerque, New Mexico, Reno, Nevada. So these are real markets that have strong underpinnings that we believe these cities will continue to grow over the next decade, but they may not be as flashy as the New Yorks or the LAs of the world.
Right. And you touched a little bit about your development in downtown Sacramento. A large part of your investment fund is focused on professional sports industry, right? And as part owner of the Sacramento Kings, you did spearhead that development of Golden One Center that revitalized downtown Sacramento. What was the inspiration behind this development?
Well, the Kings. So taking one step back, if you look at what happened in Sacramento from an NBA perspective, the Kings have always been the team of the city. There's only one major league sports team in Sacramento, and that's the Sacramento Kings. And there's just this unbelievable passion and community built around the Sacramento Kings in the city. And if we rewind the clock about 10 years ago, the Kings almost left Sacramento. There were a lot of rumors and some very viable plans to take the team out of the city. And I have to say Kevin Johnson, who was the mayor of Sacramento at the time, who was a former NBA player himself, and the league office, and David Stern, they were really passionate about identifying a plan forward to keep the team in place. And they worked very hard to establish a plan for the Golden One Center that you mentioned, where the Kings could have their games and also host events. And from that foot traffic, it would create business activity, vibrancy in downtown, and better economics to be able to keep the team in place. So all of that occurred. The professionals who run the Sacramento Kings team, I mean, they were the ones who made it all happen, and the ownership group led by Vivek Ranadive and our family were really. It was very beneficial for us just to see all the hard work that the team put into this, and most importantly, the results that occurred for the city after the opening of the Golden One Center. And it's just been a great joy to see.
I bet. And the Golden One Center in itself is a phenomenon, right? It's the first indoor sports venue to earn LEED Platinum designation, and it's also the first entirely solar-powered arena in the world. So we were actually really fascinated to learn about that. But more importantly, what was the motivation for building a stadium that was environmentally sustainable, rather?
Well, I think if you think of California, it's always been a leader in terms of environmental policies, environmental building, and being right in the core there in Sacramento. It would only be appropriate that the arena gets built in a way that's built for the future and built utilizing all of the capabilities and knowledge that we have to create a sustainable building. So that was a vision that was executed, and I think everybody within the ownership group is really proud of the work that's been done.
No, for sure. And in addition to being completely solar powered, there's also many other initiatives that make it a sustainable development. Can you walk us through some of the other key highlights of the project?
Oh, and I think one of the things that is very impressive with the Golden Center, if you see it live, is the technology that's in the building. We like to say it's the most technologically advanced building in the world. That might be a little bit of a hyperbole, but I mean, it is really impressive to see all the technology that goes into it. It's by definition future-proof in that's kind of a building term where over the years there will always be updates available to enhance the consumer experience and make it the central convening place for the city in terms of live entertainment.
For sure. I'm sure that, Golden One Center is now going to become the case study for a lot of new developments moving forward and hopefully other professional sports venues. We particularly loved the farm to court plan, where there's a lot of locally sourced foods and vendors that are brought into the stadium. That was also something that really stood out to us as far as your program. I mean, like the amount of thought that went into this stadium was really, inspiring to us when it came to what you did to be sustainable and to make a social impact in your community.
Yep.
But as you know, Golden One Center was just the beginning. I mean, you didn't stop there. You also revitalized all of downtown Sacramento, like you mentioned, and kind of Golden One Center and the Sacramento Kings is really the heart of that. But there was also the downtown Commons. So can you explain a little bit about what that project was and how that kind of interplayed with the other two projects that you had?
Sure. So Downtown Commons is the downtown district that supports the Golden One Center. It includes the Sawyer Hotel, condominiums on top of the hotel, as well as restaurant and retail space. It's really become the vibrant heart of downtown Sacramento, and on any game day or event night, or even on nights where there's no events in the arena, it's become the central meeting place for the city, and it's really fun to see.
For sure. It's a whole master plan that you guys did there and really executed it flawlessly. But what was your favorite part of this whole process? I mean, it was a very labor intensive process, we're sure, just given the size and scale. But what do you now looking back on it, think most fondly of?
Well, just seeing how an intersection of good policy and capital can help transform an area. I mean, it really was. I do remember thinking back 10 years ago when we first started looking at the site. You had to squint a little bit to see the vision. It was not the nicest part of town. But now, fast forward 10 years, and everything's open, and it is the central meeting point for the city, like we discussed. It's just a real joy to see how a project can transform people's lives in such a positive way and transform a community. So it's really, really cool to be a part of.
That's really impressive. But it feels like we're just scratching the surface, right? You've been involved in so many different projects throughout the real estate industry. And I know you mentioned that you're looking at different markets, depending on, some of the patterns, right? But as you look ahead, what types of projects are you focusing on next?
Well, within the Opportunity Zone platform, we continue our investment strategy of focusing on multifamily industrial developments in up-and-coming secondary cities. We also have made a concerted effort around workforce housing. That's an area that we spent a lot of time and started making some very meaningful investments in building portfolios of workforce housing in the Midwest. We think it very much aligns with our social impact mission that we have as a firm. And also it's a great business because we're able to, without a ton of risk, acquire these properties that are already cash flowing, and utilizing the high quality team that we have at Revitate Tree Strategy, we can make operational improvements to make these communities even better for the people that live there. And that results in high retention rates. It allows us to manage the properties a little better. And the results are providing and preserving workforce housing for normal, ordinary, everyday Americans, whether they're policemen or firemen or nurses, entry-level white-collar workers, and having that opportunity for housing and not having to really change the property physically and flip out the renter cohort. We're really focused on preserving these workforce housing, allowing people naturally affordable housing for families in the Midwest. So we love that strategy. We continue to invest in those areas.
Yeah, Melissa and I were just talking today about the national affordability crisis that we have, right? There's such limited supply, and as a result, prices are skyrocketing across the country. And so that's really great to hear that you're committed to building and, offering more affordable housing for, the workforce, like you mentioned, and because that's definitely an area that's lacking a lot of supply. But going back to kind of what your future plans are, you obviously had so much success with the Sacramento Kings. Do you see yourself duplicating that model to an extent surrounding maybe other professional sports teams where you can come in with a master plan and revitalize an entire area, with the core still being the sports team?
We are always evaluating different investment opportunities across the board. We love the business of sports, and that definitely is a passion for us. And the industry has served us well, and we love being able to add value where we can, especially on the real estate side. So I think there will be more to come on that note.
For sure.
That's great to hear. Well, today's discussion has been super enlightening. Thank you again for giving us this time. But as a pioneer in opportunity zone investing, I know a lot of our listeners are, tuning in today, and they would love to hear some advice for, whoever is listening into that really want to start and invest in opportunity zones.
Oh, sure. So for opportunity zones, I think the key thing is project selection and manager selection. If you're viewing it from an investor perspective, don't get hung up on all the tax benefits. The tax benefits are great in certain circumstances, but they're all based upon appreciation. So if you lose money on a deal or you pick a bad manager who doesn't make good investments with you, then none of those tax benefits matter. So really understand the real estate, understand what is the cash flow profile, what is the appreciation profile, what are the tax advantages, if any, that you can use. But it starts with good real estate and good people selection in the managers that you work with.
Yeah, that brings the conversation full circle back to your dynamic with your sister, and having a relationship that you can trust is really the foundation for building any successful business. So we've been so excited to speak with you today to learn more about the many different facets of your portfolio and all of the accomplishments that you have, and really just how you've intersected sports and real estate. And so thank you so much again, Alex, for this chat. It's been so informative, and we're really appreciative.
Thank you so much, Alex, for joining us today. It was so insightful to learn more about opportunity zone investing and how you've really leveraged that as a way to create a very dynamic real estate portfolio. You're so accomplished beyond real estate, and that intersection of sports and real estate is so interesting for us to learn about.
Absolutely. It was very insightful, and I think our viewers are going to find a lot of value in this episode. And of course, you can find us at tower.com and on our social media platforms, Tower.